So Groupon reported yesterday after the bell, shares tanked. What did the investors not like about this report?
There were two things that they didn't like. First off, they had a loss, and
Right.
people were expecting a profit, and there was some confusion.
Not a big profit,
no,
but they were hoping for a profit.
Plus,
Right.
they're right there. They were trying to make some money.
Yeah.
Now
the stock down 11%. It's down 15% yesterday after the market. So.
Yeah, and it's still pretty pricey even at these levels
Right.
in comparison to other internet companies. The laws came about. There was some confusion about an international tax, which hurt Groupon because they got taxed at a rate of 1,600%.
An insane number,
Right.
Absolutely insane number.
Which they said is only a temporary thing. Will obviously go down, and it's just the cost of them doing business in Switzerland. So there was some confusion, but also this is a company that's spending a lot on marketing itself and on hiring employees. I mean, they are growing, they are trying to market, and they need to keep marketing themselves in order to attract business. So that was the one thing, the disappointment over the bottom line, or lack of it. And then the other thing that I think disappointed them was the outlook, and the fact that Groupon didn't give a lot of visibility, and what it did give in terms of revenue number was disappointing.
Right, and it seems like the company is in something of a catch-22. They have to market heavily, they have to spend money on marketing to remain relevant, because, listen, people forget quickly.
So they've cut that pretty dramatically, right?
They have cut it, but it's still 31% part of their revenue.
But when they cut it, it seems like the revenue growth slows down as well.
Right.
That's the catch-22.
Right. You do lose the ability to get some subscribers that way.
For tons of new employees as well.
Right. Yeah. And all of this is because others are getting into this daily deal business. You know, you've got big guys like Google, Facebook, AOL that are all playing around on the edges of this thing, and these guys, this is not necessarily something that Groupon is going to. Groupon needs to keep growing and sustaining itself to keep dominating in this area.
Because look, they do one thing, right? They do the coupons. I mean, they do the one thing. Yeah, Living Social is also out there, right? I mean, they are going to be hard pressed, I think, to make a real profitable go of this in the long term.
But like a lot of these companies, they'll evolve into something else over time, right?
Yeah, that's the hope. But right now the coupon business is still their primary source of business.
Does the disappointment over the Groupon results and what they've said in the past 24 hours dim the luster at all of any of the other IPOs we expect to see? Does it make anyone feel less enthusiastic about Facebook? Or?
No, but I think what it does is it serves as a warning sign that not all internet companies are built equally, and that each one has their strengths and weaknesses and need to be considered on those own strengths and weaknesses. Certainly, Groupon's success or lack of success isn't going to mean anything for Facebook.
For Facebook, right?